Hello, chart watchers and Decision Point faithful. Welcome to this Friday, January 11th Decision Point show with your host, Aaron Swenlin, and with special guest, Carl Swenlin, my dad. For those of you joining us for the first time today, welcome to the Decision Point show. And for our regulars, welcome back. We have quite a show for you today, lots to cover. And again, with Carl being here, we are going to have some great discussion on quite a bit of things. So we're going to actually cover not only our daily and weekly charts for the large caps, but also for the big four: dollar, gold, oil, and bonds. And of course, we'll cover our decision point indicators, the climactic indicators of the breadth and VIX, and then the Swenlin trading oscillators. And we have a special bonus regarding the Swenlin trading oscillators, but we'll talk about that when we get there. We will cover our intermediate term indicators, the ITBM and the ITBM. And then today for our bonus, we are going to be doing a comparison of the PMO, PPO, MACD, and KST over the longer term, just to make a comparison to see, the differences in the signals and really why we prefer the PMO. All right. Welcome, Dad. Glad you came back.
Greetings.
It is great to have you here, as always. But we do have quite a few charts to cover. Oh, yeah, we're going to also talk about Apple. We're seeing some positive divergences on the daily chart. So we'll talk about that a little bit at the end as well. All right, well, let's first look at the Decision Point scoreboards, and you will find these in the Decision Point chart gallery. You can also make them one of your tiles on the home page, which I certainly encourage you to do. We haven't had signal changes in a while, but this week we did end up getting some short-term trend model buy signals, and I think they arrived a little bit too late. But they managed to shoot very quickly. That we're seeing those signals while we're seeing that 20-day EMA still moving to the upside. I think you're going to see some problems on these charts. I don't know that these will be hanging around that long. And like I said, I think they're a little late because we probably are going to be looking at some lower prices next week. So keep that in mind. All right, the Decision Point sector scoreboard today. As you can see, we did end up losing one of our buy signals, and that was in consumer staples on the long-term trend model. Now, long-term trend model buy signals and sell signals are determined just by the 50 and 200-day EMA crossovers. So an upside crossover would be a buy, and of course a downside would be a sell. And right now, everything is on neutral. Well, what does that mean? Well, just in general, what we mean by neutral is a soft sell signal. So your position should be more, fully in cash or fully hedged. So, and obviously you can't have exactly that, but that's just to give you the idea that we're not going on a shorting signal necessarily, although I know some of our more aggressive traders will use a neutral as a short. In any case, the intermediate term trend model is determined by 20 and 50-day EMA crossovers. And you get a neutral when that crossover occurs above the 200-day EMA. So, if you've got a bull market situation, your 50s over the 200, you don't want to go necessarily into a full shorting sell signal. And so that's why we use the neutral in that case. But like I said, the main thing I wanted to point out is the only three that still are hanging on to buy signals are in the defensive sectors of healthcare, real estate, and utilities. And I did take a peek at those long-term trend model signals, and they are looking like we might be losing them soon as well. All right, but let's go look at some of those charts. And Carl, you're going to be coming in as you have questions or as you have comments. So I definitely want to have you take a lot of the lead on this. So since we are so lucky to have you here. So anyway, I did want to point out on some of these charts, I don't want to look too deeply into some of the large caps, but one of the things I was talking to my dad about earlier before the show is that it's very interesting. We're seeing a slowdown right now. We're hitting that area. Looks like we're decelerating somewhat. And it's right at these mental stops, in my opinion, these mental areas of resistance for the Dow, 24,000. And if we look at the OEX, I think this one came in just about 1150. So you're seeing that mark the area of, you can see it better in the thumbnail. That's where we're starting to see some turnover. And then let's look at the NASDAQ and we'll get a little bit more in detail and depth there. With this one, I would say I was looking at 6,600 as sort of the mental stop or resistance level, but it looks like it's turned out to be a little bit more towards 6,650. Although if you take this support resistance line, and what I did is I tried to match it up with these closing prices back here and back here in December to give it a little bit more of a short-term flavor. And in any case, as you can see, we're starting to decelerate and point downward. And Dad, I know you pointed this out as I was in the process of annotating this chart, but there is a reverse divergence here. And is that a positive divergence or a negative divergence?
It's a divergence that is the reverse of what you would expect. What you would be looking for at this point would be, well, let me think.
Well, I know that usually when we look at regular divergences, I always start with the indicator and do the rising bottoms or the declining tops. In the reverse, I know we're kind of looking at it more using price first and then the.
No, it's just that normally when you have a positive divergence against price, you would have a higher high to go against a lower high or a double bottom on the price. Mm-hmm. And the reverse would be true. I mean, the opposite would be true if you were looking at a negative divergence. But a reverse divergence is when you are exceeding a prior top, like what we had there, and as opposed to the price top is lower than that corresponding lower top on the OBV. Am I making it clear?
Yeah, I think so. I just know that, generally when you see an indicator arrow rising and then you see a declining one in price, a lot of people will immediately think of that as a positive divergence. And in this case, being a reverse divergence, this isn't a bullish sign, is it?
No. A positive divergence would be a higher indicator high, a higher indicator low versus a lower price low, which you see you do have that on the November and December lows. So, but a reverse divergence is the opposite of what you're expecting. You're looking at a negative divergence, in this case, against a price high that is lower than a prior high. But instead, we've got a higher volume OBV high. What it's showing, getting down to it without making it, continuing to make it complicated, you can see that the volume is pouring in on this upswing, but it's not pushing price higher than the previous high in December. Right.
So yeah, we're looking at the volume is starting to push higher. It's acting like we should, volume, price follows volume. At least that's the saying. Both of us don't really believe that, but that's the idea, right? If price follows volume and volume is increasing and rising,
it should
affect that, right?
It's basically a lot of volume pouring in, but it can't get price back up.
Right.
You can't get it back
to where it was.
No.
All right, let's get moving. We got a lot to look at. Okay, the NASDAQ weekly. I noticed on the weekly charts that our PMOs are starting to decelerate. And I know when you look at this chart just right off the bat, you probably are thinking, oh, well, that's great. We have an oversold PMO and it's getting ready to turn back up. This is the bottom is in and we need to start looking for upside potential. But as you and I were talking, if you take it out, what did we say? I think it was like 20 years.
Yeah, something. Just looking for a historical range and see what you get.
Off of a bear market, It is not unusual to see these readings on the monthly PMO or the weekly PMO to reach all the way down into the below -10. So I have to say 1.17, negative 1.17 is not oversold. So just wanted to certainly let everybody know that, because again, usually when you're looking at these charts, you think of the bottom as the bottom of the chart, that's oversold territory. That's just not necessarily the case. So you need to bring it out. For daily charts, I usually bring it out about 7 years. Gives you a pretty good idea. So we do have the buy signal here on the S&P, but again, that resistance at 2,600, that's what I have been looking at. And it's sort of a mental resistance level, the level people will talk about. And, you know, we've hit that level and we're trying to turn back down. I mean, the PMO still looks pretty healthy, but I don't like the fact that we've hit that level and are starting to decelerate and get ready to turn down. The weekly chart, you can see that level at 2,600 level, and really how it doesn't match exactly to the lows we had back here, but it does, you know, it approximates it, I think, fairly well when you're talking about just the 500 point difference. But we've hit that level now. It's going to be really important to see if next week we can push up above it. That would certainly have me thinking a little bit more about, you know, not worrying. Like, I'm not going to say we'd be out of a bear market, but it would certainly have me thinking a little bit more and watching a little closer some of the indicators to make sure that I am on track with that.
You know, it's not out of the question that we're going to see a bottom here, price bottom, and a PMO, weekly PMO bottom. Mm-hmm. And it could be, I don't know, it'll turn everything around, but, you know, you can get a move up to, say, 2,800, which would break a falling trend line off of the right there. That would be a nice fake out, and we've seen those many times. Mm-hmm. So I'm still, my heart is still with the bear market. Yes. But
so is my investment account right now. Yes, I figured out that I'm about 80% cash and 20% in metals. So I think that tells the story right there. All right.
That's pretty much 100%.
You're in cash, right?
Absolutely.
All right. So IJH, we've got a little bit of a breakout here, which I thought was, you know, somewhat positive. But again, we're looking at a zone. You could, if we took this up just a bit higher to these, you know, intraday lows, you can see we are starting to stall out. And really, even the 50-day EMA is acting as overhead resistance right now. So I was watching that we were seeing the confirmation with these indicators falling for that decline to continue. And when we came out and we got that buy signal, that's when everything changed and we did get that nice rise to the upside. But again, as you can tell probably from what Carl and I are talking about, we're not on board with this being all over with. But I think most of our brethren feel the same. All right, the weekly chart on IJH, we do have that pop above 175, and that is an interesting level. But I think you could even make the case for that 180 level being something we could still see. But that could probably, I'm thinking that might be the place where we'll get a failure, if not sooner. IWM, we'll look at the small caps briefly. Same thing, really. I mean, we're not seeing anything much different than we're seeing on those other charts. We're hitting a mental stop area as well as price low area of resistance at 145, and we are starting to see a bit of a slowdown. The PMO is not really showing that deceleration just yet, but I think if this starts to turn like I suspect it will, the PMO, of course, will follow. And let's see, Russell 2000, rising bottoms. I had drawn these in, and we're getting back up toward that one. Again, I think that 145 level is still important. If we see that breakout, and we can see maybe a continuation of this PMO trying to make its turn to the upside, maybe we might be able to get a little bit more out of the small caps. And, you know, on the show, Tom always talks about with a weak dollar, typically, or a strong dollar, usually the small caps do well. Well, I don't think we're going to have a strong dollar. It's already starting to weaken. And so I don't know that, you know, we'll get, small caps won't have that tailwind. All right, the climactic indicators, and you and I were talking about it. It does seem strange that we didn't have really any readings on the new highs, new lows, and haven't for quite some time. But as you pointed out to me, when you get this many new lows, it takes a long time for them to get all the way back up to start making new highs. So that's probably what we're seeing here.
Right, and even, and of course, you bounced off the low in December, and so you're not making new lows because we're not really pushing down very much.
Right. And so what I've been watching as far as the, and everybody, if you haven't read my Vixen Breath article, I suggest you do, because I talked about this on Tuesday, actually, how we were looking at declining readings right now on the advances and declines, the net advance declines. And we had gotten that push, we gotten that big move, which looked like a buying initiation, and it continued on up, but we started to lose the advancing decline, the net AD volume and regular, the breadth. And they started to pull back like this and not supporting the price move to the upside. And so now it looks like a selling exhaustion, pretty much lining up. I was thinking the VIX might make it all the way up to the to 15 and puncture the upper Bollinger Band, but we could be looking at something like this we saw in early December, where we just don't need to get all the way up there and puncture it before we end up with the decline. All right, this is one of the interesting ones here. So the short-term indicators, and you were writing about them too, have gotten really, really overbought. They'd been very, very oversold, and they very quickly managed to get into really overbought territory. And now it looks like they are starting to tick downward a little bit. What does this tell you as far as, you know, you were talking about, I mean, I think our immediate thing is that short-term indicators and overbought territory, bear market, we should look for things to go down. And I still think we both agree with that. But
well, I look at it and I say, well, it could be initiation climax, initiating a new up leg, you know, the continuation of what we've got going. But as far as I'm concerned, we're in a bear market, so I think we are truly very overbought, and we should see a pullback.
Now, we did have a longer-term chart.
Yeah.
Let's look at that.
This is the, first of all, I wanted to look at how does the high comparative previous highs. Here's a 20-year chart, which is ridiculous with a short-term indicator, except it does show you action on the margins, which is really what I'm looking for. It's not currently as overbought as we've ever seen, but what more stands out is the overbought readings, particularly DOB. That's where I first spotted it. But you can see we're right now at one of the three largest, lowest levels that we've ever seen on this indicator. And if instead of the bear market being over, if you look at back in the 2000s, 2001 through 2003, you can see how the indicator made three lows before it finally hit a bear market low. So we got the low in 2002. I can't see it.
Yeah, 2002.
Yeah, 2001, 2002, and then finally beginning of 2003. You've got a complex bottom with these occasions. That this basically shows you the possibility how long it might take before the bear market is over. This took about what, over a year to
Right.
finally get the
Right. And now we're looking at these very deeply oversold readings that we had.
right. And then you go to 2009, you can see complex um, bottoms there, deeply oversold, but it took what, 6 months before,
Oh, your audio
and
is
then
cutting.
2011, 12, you can see another set of deeply oversold readings, and that's what about it looks like about a year that it took to get that um, bottom, that
Mhm.
bear market. And it was a very shallow bear market, but still, you got the
Right.
process that it took to get the bottom in.
Well, and one
And
thing,
then,
yeah.
go ahead.
One thing I was noting as well is that you can see that when we finally did hit these ends, a lot of them ended with positive divergences.
Right.
And so that's something else we might want to look for.
But the point being is that yes, we did have a recently very oversold reading on these all these indicators, but it's just the beginning of putting in a bottom. That's where we're going.
Yep. All right, let's move to briefly, and all of the stuff we're talking about, at least a lot of it, you write about on Fridays in the Decision Point blog. So if Carl's not on the show and you want to get some more of his opinion on this stuff, definitely read the Friday Decision Point weekly wrap. All right, intermediate term indicators. I'd been concerned because they did get very oversold, and they'd had the positive crossover, and we came in with this bottom, and price was rising nicely, and I was like, well, I don't know. I mean, everything else is telling me bad news, but these, these indicators looked really good at the time. However, I've noticed that they very quickly have gotten up to that zero line. And I suspect if we're in a bear market situation, this would be prime territory for these guys to turn back around and start to oscillate in a different direction. You can see
Right.
back here, we had very low readings before. And again, we were not out of the woods. We weren't out of the woods. So I think that this would be prime location for them to turn around, but being intermediate term, it might take them a little longer. And I wrote the Fibonacci, I annotated Fibonacci lines here because I thought they really gave us a good idea of some of the levels that we should expect to see. All right, we're coming down to the end, so let's do some quick look here. We have got the dollar is obviously broken its rising trend, and it's trying to make that upswing back to those that top we saw back here in the shorter term lows, and we hit it and stopped. You can also see in the thumbnail we're very, very close to a 20, 50-day negative crossover. PMO is now negative. We know it can get further oversold, so the dollar just isn't looking healthy. And there we go. You can see the breakdown. You can see that we just got in today. It finalized a PMO sell signal on the weekly chart. So that's an intermediate term PMO sell signal, which is a problem. So it broke down, like I said, below this top we saw earlier. The next level I would be looking at really is honestly that 2450 level where we had the top back here. I think, maybe we could get lucky and stop here at that 25 sort of mental level of support, but I don't know. Looks like a lot further down to go. All right, gold, we're a little bit on the overbought side here. But when we get overbought, we can relieve those conditions with consolidation. So I think worst case, we'll see some consolidation along 1280, but to get that PMO maybe out of that overbought territory. But I would start looking for another leg upward, especially if the market starts to turn.
Yeah, that PMO top is a problem,
Yeah.
but we could just
It's
price
not over
action is
here.
pretty good lately.
Yeah. I think worst case is probably consolidation out of it. But of course, if we get that breakdown below 1280, I'll change my tune a little bit. And, now we did see a breakout to the upside of a rising trend channel. So we're getting a lot of interest in gold, of course. It's on the buy signal, and we're just about ready to get that crossover of the 17 and 43-week EMAs. So it's still lined up pretty well, I would say. And USO, and then we'll look at our special chart. Okay, USO, we did get the breakout, a nice gap. I would say you had your breakaway here. Now you're getting just a continuation gap. Could look at an island reversal, but you know what? Coming off of these this other gap and rise, I wouldn't be looking at it necessarily as an island, especially when I see the buy signal. The PMO doesn't seem to be that worried about turning around. If we did get a pullback to close that gap, that'll take us to about 1050. But I'd be looking for a rise to 1150 based on the daily chart. And here we go with the weekly chart. You can see the PMO is decelerating, but it can certainly go lower if we needed to. Price, however, not that much lower. I think $8 would be really I was thinking we would get there before we turned back up, but it didn't happen. And now we're rising off of that 950 level. So. All right, and bonds, and then we got a few minutes. We've got the PMO sell signal on bonds. It broke down below this area of support, but you can see that hasn't been that important to it anyway. You can see earlier, those tops don't seem to be that interesting to it. 120 is the level to watch. I'll look for that to test that level, but based on the PMO, I wouldn't expect it to bounce there. And then we had been looking at a really large head and shoulders on TLT, but as soon as we broke through that declining tops trend line, to me that shattered the pattern. So now what I'm going to annotate next week is a consolidation zone right here between 110 and about 125, meaning that we're near the top of that zone, likely to go down and test the bottom of it. All right, and our final charts. All right, we looked at that short term. Here is the comparison of the monthly PMO, PPO, and MACD, and what we're looking at. I was going to fix this for us. That needs to be, okay. There we go. So what we were looking at is on and you can see right here, this is a monthly chart. So looking back all the way to 1998, Carl put this together. Tell me about it.
Well,
less than a minute.
The PMO. Okay, why don't maybe we should save it till next week.
Yeah, maybe we'll save it.
We had.
But the main thing is to look at how noisy they are. We'll talk more about this in detail, I think, next week. That would be better. So I can tease you with that one. And just a real quick look at Apple here in our last 20 seconds. This is the positive divergence that we were looking at. You've got rising bottoms on the PMO, rising bottoms on OBV, and declining bottoms on price. So in the short term, this Apple's starting to look pretty good. But that 160 level could be a big problem. But we could see a little bit more on the upside here.
But the weekly chart's still disaster, so.
Yeah, exactly.
Look at it short term only.
All right, that's it for the show today. Thanks so much for attending. If you could just fill out that survey, you'll find it at the bottom of the viewer if you're watching live. And we will see you here next week, Friday, 1:30 Pacific time, and away we will go. Thanks for attending. Talk to you next week.